Welcome back, Augury investors. Tyler here. In this video, we're going to go over Alibaba stock, and specifically, we're going to see how it fits into the public portfolio, or rather, if it fits into the public portfolio. So I am on the auguryinvest.app. I'm going to go to portfolio, manage portfolio, public portfolio, which we've already done two stocks, Palantir and TSM. Overall, both of these stocks are too expensive for exposure, in my opinion. We're going to find a lot better opportunities out there. But let's go ahead and add Alibaba. First thing that we kind of need to do here is check out the price. Price is 113.25. Let me open up my calculator and do the math on $10,000 divided by 113.25. That gives us 88 shares that we are purchasing. Add that holding here, and then we'll just go to my first step that I always like to take is briefing.com. This is one of my favorite websites. I actually have an affiliate link. I've never used it before, so if you're interested, give me a shout out. Look at right here. Apple aiming to partner with Alibaba to develop artificial intelligence for China iPhone users. Okay. So right off the bat, we're getting some Baba news. And that's kind of why I'm interested in this. I kind of wanted to look into the Alibaba AI because, DeepSeek kind of like sank all of the AI stocks. And like 2 days after, Alibaba came out and was like, "Hey, our Quen AI is like better than DeepSeek." Now, the real question is it cheaper than DeepSeek? But DeepSeek can't even have they don't even have the compute power to like get their AI API up and running. I've been trying to use it, and you can't add credits. So, all right, let's see if we can find a write up. Okay, here we have something. David Tepper added to Baba, increased positions in JD, Alibaba. And if you guys don't know who David Tepper is, he is a big dog in the hedge fund world. He is the owner of the Panthers, Carolina Panther football team. He is an American billionaire. He has a really strong track record of kicking butt in markets. So I know he's been bullish on China. I've been bullish on China. I know it's a rather quiet little tea party of people that want to admit that they're bullish on China. But let's be real. Wow, okay. So Alibaba is not planning to invest in DeepSeek. I was actually thinking that they would probably get their hands on that. But, I mean, if their AI is just as good, why would they waste the money? Okay, so tariffs, we already talked about that when we loosely discussed TSM. So if you guys need to go back to that video, check it out. I want to find like a summary on Alibaba. Citron says, okay, one last victory lap before diving into new ideas. Citron has been ahead of the curve on Alibaba and Quen for the past 6 months. But what's even more critical and still overlooked is Quen's enterprise applications. China lags the US by decades in business software, and the catch-up will be rapid. This is bullish for China overall and strengthens the long China trade. Wow. So I didn't know Citron was also bullish on China. It seems like my little tea party is growing pretty quickly. Here's the original tweet. I know a lot of people don't like Citron, but I mean the guy hits. Okay, so whether you like him or not, the guy hits stocks. He's pretty damn good. All right, perfect. This is what I'm looking for. So this is at end of December. This is not not new, but not too old either. So Alibaba ticks higher today, looking to slash AI related prices as competition heats up. Alibaba is enjoying modest appreciation today after a Reuters report that the China based e commerce and cloud giant would be looking to enact an up to 85% slash on large language model LLM's particular type of conversational AI. The price cut would be aimed toward Baba's Quen VL, a multi model LLM based AI assistant that touts technological edge over other LLMs like GPT 4o, specifically surrounding video processing. Okay. So this is all about AI. The AI frenzy has been a significant driver of Baba's improving cloud segment revenue growth, recently boasting a 7% jump. Uh, ba, ba, ba. Okay, Baidu, often referred to as the Google of China, is focused on advancing AI capabilities, serving as the cornerstone of AI driven transformation. The company's flagship Ernie 4.0 turbo model was recently shown to increase the throughput by 48% compared to the debut. Okay, Tencent. Okay, so they're saying double digit growth over the medium to long term. The company is constantly allocating capital to intensive R&D and aiming to be the leading cloud service provider for AI, cutting prices while adversely impactful to near term revenue. May be the right move to ensure it can reach market dominance. Okay, Baba shares have been in a slump. Yeah, no kidding. They've been like, they're way off highs. But they have an AI component, and say what you want about China, but let me pull up the Baba chart for us, and I'm gonna zoom way out. Look at the monthly here. So this thing was at $300 a share, which was I think at one point it was like about a $600 million, maybe even $700 billion market cap. The business itself, let's look at Guru Focus. We'll pull up Guru Focus, Guru Baba. And let's look at the numbers. So, really large business. Let me zoom in for you guys that are at home watching. So, I am looking here. $265 billion company. Um, they have a lot of cash, $55 billion cash. Obviously, they have more cash than debt because the enterprise value is at $258 billion. Current assets to current liabilities, very healthy. Cash to current liabilities, very healthy. Total assets to total liabilities, very healthy. A lot of shareholder equity. I mean, this guy's got 150 billion in equity. That's a lot. Revenue 134 billion. We do see some quarter over quarter growth. So I'm comparing September 2023 to September 2024. We do have growth there. It's modest. We do have an increase in the gross profit margin. I like to see that. Operating margin is pretty strong at 12%, and profit margin is 9%. So these are very strong numbers. These guys. Okay, so there was a net income ad here for some reason. But yeah, they're doing good. Like the operating profit, pre-tax income is strong. So we do have earnings growth. We do have gross profit growth, and we do have revenue growth. So it's pretty good so far. So they're making 11 billion. Let me let me take out the. Let me see if there was a one time. Okay. Tax rate 25%. Net income. Okay, so this is about right. And so they do 12 million or 12 billion plus 2.8 billion minus 4.4 billion. So let's pull up my calculator. We'll just do the math. We'll do 12 minus or plus 2.8. So I'm adding back the depreciation, and then I'm subtracting out the capex, which is about 4.5 billion. So they're making about 10.3 billion a year, which that's not, excuse me, that's not that cheap. Making $10 billion a year. It's a $250 million market cap. Let's see what they've done in the past, because those numbers are not that great. It's not as cheap as I thought it was. Yeah. Okay, so they were doing 20 to 23 billion in net income. That's a huge difference. Um, I do like the idea of them, you know, dominating in AI. Like I'm pretty sure. Let me just go to ChatGPT. Um, what does the? Let me zoom in for you guys so you can see what I'm typing. What does the tech software that businesses use in China look like? I have read that China is heavily reliant on Microsoft products and services. Is that true? So, reliance on Microsoft products. Windows is widely used in operating systems in China, especially business environments. However, the Chinese government has been encouraging the development of domestic alternatives due to security concerns and a push for a technological self reliance. Uh, so, Microsoft has been, basically crushing it in China, but it does look like Alibaba Cloud, Tencent Cloud, and Howie. I don't know. I'm not sure how to say that, but it's the phone company. WPS Office is a widely used alternative to Microsoft Office. Um, I have read that Microsoft is basically like very ingrained in a lot of these legacy Chinese systems. So I do think that there is an opportunity for Baba to go in there and maybe clean up with their cloud offering uh, going forward. Now, let me go back. I'm going to exit out of the Alibaba stuff on briefing, and I'm going to exit on here. And let's go ahead. We'll open up a Baba tab, and let's try to value this thing using Guru Focus. I don't know why my chart's not loading recently. Okay, so we're on here. And real quick, let's just see what the revenue growth rate has been over the last 5 years, 3 years, 1 year, 10 years, 15 years, 20 years. Okay, so I think the 5 year growth rate seems pretty reasonable. At the current time, I'm going to scroll all the way down. I have a couple of. The good thing about Guru Focus is they allow you to make your own. You can make your own customized fields. So I have a bunch. So owner's earnings is about 15 billion. I know we got 10 billion earlier, but my programmed little field says it's about 15. Owner's earnings per share is $6.27. So 627. The return on invested capital is very low. So if you look at here, they have $75 a share in invested capital. And what that is, that's invested capital is important because when you think about business, you need to like be conscious of how much cash is this company producing based on the total investment amount of that company. For example, this company has $75. Someone gives you $75, and Alibaba is able to generate $6.27. If somebody gives you $75 and you're able to generate $30, that's very superior. And that's a really, really good business. I mean, if you're generating above 20%, like if someone gives you $100 and you're able to generate 20% every single year, because that 20% is going to compound. It's going to basically loop over itself. So year one, you'll have 120. Year one you'll have 100, year two you'll have 120, year three you'll have 144, right? Because you're growing, your earnings are growing based on that invested capital amount. So the whole game of business for Alibaba is, okay, we have $75. What areas can we invest into to grow our earnings? And what we're seeing is they're growing in AI and they're investing in AI. And they got a good chance to dominate in China. So right now we're doing $6 and 27 cents in owners' earnings. They've done 8.79 in the past. And you can see here that the invested capital per share continues to go up. And what invested capital is, it's the total amount of equity, so all of the assets plus the debt, okay? So for you guys trying to figure this out at home, the way I calculate invested capital per share is it's very simple. You take shareholders' equity and you add the debt, and then you divide that number by shares outstanding, and you get you get invested capital per share. All right, I'm dying. If you guys can't tell, I'm a little sick. I'm hoping it's not the flu, but I feel ultra terrible. But I'm still showing up. Barely slept last night, so no trading, no making bets. All right. So they have $56 of book value per share. And let's go back up here to the growth rate, and let's just see, what they've been growing the book value at. Instead of using like revenue growth rate, book value has grown at 7.6%. So I would imagine it might accelerate, a little bit more than that. But let's just say revenue growth rate 8%, and then I think this is a pretty long-term play. I kind of think Baba might crush it going forward. So, okay, first one. We got our first undervalued stock, right? So let me exit out of, I'll just open up a new tab here. I'm going to add it to our watch list, and I'll make this guy go to the side, move to the right. Okay. Public portfolio. So if our inputs are correct, we do have an undervalued stock, and that was like the base case. So 211 and 2025. Entry price is 113.25. Price target 1. So I'm just going to modify this a little bit for us. So I think that Alibaba, this earnings is going to be okay. They're growing at about 7%. I think that they're going to have a little bit of growth. Like, I honestly think that 8.5% growth rate could be conservative. On maybe on the back end, like 20, it's hard because 20 years from now, this might be too bullish. But let's just say they do grow at 4%. Uh, and the reason why I like Alibaba, and I'm not too scared to like put a little bit larger growth rate on the back end of things is because that's a company that I see having a lot of moats. They are a true player in China. They are a dominant player, and we're seeing that they're actually kind of cheap, which is rather surprising. So I'll use this as my base case. I think the stock is worth $155.15, and I think there's a 30% probability there. Now let's kind of juice it up. I'm not gonna juice up the first 10 years, but what it wouldn't be insane if they did grow at 8.5%. Um, so let's just say their owners' earnings are currently. So let me just open up my calculator real quick. We have 6.27, and I'm gonna do multiply by 1.0185 to 20. That would be $32.55 per share. Now I want to multiply that by the shares outstanding. So that would be 60. Okay, I'm not trying to do this in my head again. So 32. Now I'm doing 32 and 5 cents. So $32.05 per share of earnings times the total amount of shares outstanding, which is 2.376 billion. So that would be $76 billion in profit. Okay. Well, are there any companies that are currently doing this? Because that's a huge number. And the easy answer is just to go, okay, well, let's look at how many companies are doing, $70 billion in profit. Apple. Let's see if Google is. Google. Microsoft. These guys are all doing 78 billion or more. Amazon is Amazon's a little bit higher than I thought. Walmart definitely is not. Yeah, no way. Costco, no way. I mean, these are huge, huge businesses, and they're not even close. So Alibaba would have to be 10 times the size of Costco. But Alibaba was a tech company on the back end of things. Like, I mean, they have a very diverse business. So we have the big guys. All of the big dogs are doing, I think Meta's probably doing around 60, 62. Good guess by me. Okay, cool. I like that. I got that close. I like that. It means like I'm not delusional, which would be a problem. I'm trying to invest money. I'm totally delusional. Okay. So, you know, and, we already kind of discovered that Alibaba is bigger than a lot of these companies already. They're already doing 12 billion in profit. In 20 years from now, I mean, they're probably going to eat up everything. They got look how much cash per share they have. 25 billion or $25 per share times, you know, 2.4 billion. They got like 56 billion in cash. Okay. And then let's just be a little bit more aggressive here. Let's say they grow at 12.5%. So they have revenue growth acceleration, and then we'll bump it down a little bit on the back end. But that's almost a double. Okay, so we're looking pretty good on Alibaba. And then finally, let's do something like this where they actually grow. We know they're not going to grow like, insanely, but let's say like I don't know. Let's say they do grow for 5 years at a rate of 15.5%. Let's say like AI kind of does one of those and they just, dominate inside China, like operating systems, AI automations, all that stuff. These guys have a huge, apparently they have a sizable AI advantage. Um, but okay, that didn't necessarily work. But let's just flip these two. So our best case is this one right here, and our base case, our good case is right here. Okay, that sounds about right. I'm gonna yell at my dog real quick. Hey, sweetheart, on your place. Good, down. Good girl. I'll be with you in a minute. All right, and our stop out. All right, great. Now we got that sorted. Let's just use our book value um, plus, let's say, maybe 7.5% of growth, and that this is our worst case scenario. Is no, let's just make this about $35 a share. Okay, and then let's make this that. Okay. So I think the worst case scenario is probably we gotta chop it. I mean the bet's gonna be too bullish. So maybe we'll do something like this where we take it. Okay, what is the low of the last 3 years? All right, let's call it about right here. I'm using this point, this point, this point. Like it had a hard time going under that. So let's call it $65 a share of point of risk. Okay, situation, Alibaba, getting crushed because it is China, you know. I mean, $65 a share point of risk is book value plus a couple years of earnings. I guess the biggest risk would be like if Taiwan or China invaded Taiwan and the U.S. put sanctions on China and halted the stock, and we get screwed. So something to consider. Obviously, this is not investing advice, educational purposes only. Alibaba's getting crushed because it's China. They very likely, I'll say, they likely 65% have advantages in AI field. Quen, it's all caps, Quen is a catalyst, plus China stimulus may act as a tailwind. Stimulus. How do you spell it? Stimulus. Thinking Baba could see 50% upside within, 3 to 4 years. I'll even say 2 to 3 years. I think that's the real catalyst. 2 to 3 years. Thinking more of a swing trade type position. Notes, pretty good exposure for those without China exposure. I'm thinking that it's riskier to not have any exposure to China than to have some. So I'm not saying go all in on this thing, but might be a good idea. China is kind of, on the up and up. They've cleaned up a lot of things, and there is a very good chance that they do become, the largest economy in the world. If we own an asset that is like dominating the AI space in the number one economy in the world, I think we're going to do pretty good. And the difference between Chinese companies and US companies is Chinese companies typically don't throw money at problems. Like US companies, like the way that we solve problems is like, all right, just throw more money at it. China is more like, no, 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 no. Let's think through this. Let's figure this out. That's how DeepSeek, is running their AIs, their AI at such a lower cost with less compute power. It's because they used it as a limitation, and they said, okay, let's figure out how to do this with our constraints. And that's where creativity takes place. So, pretty exposure, pretty decent exposure for those without China exposure. Um, Microsoft has dominated China business, and Baba may get help from the gov to reduce reliance on, let's just say, US company systems. All right, cool. And we'll add that to the watch list. Hit that refresh button. Ranked it. All right, cool. All right, so currently the stock has a very small amount of edge, unfortunately. I thought it was going to be larger than this, so that we're going to get like a position here. I will go ahead and, I got this recording. So typically what I do is I'll screenshot these and I'll put it in a folder for my record keeping. But let's go to trade logs, view all log, and then Augury public portfolio, and let's actually take a position in this Alibaba trade. So the market is actually open right now. Let's just go Fin Baba. 1271, 1259. This says 1132. I think it's on a 15-minute delay. So I'm just going to take it at this price. I'm very confident Alibaba will probably touch 1132. So let's go in our trade log. We are making our first trade, Baba long, and then entry price will be 11132. No exit, and our numbers just share. How big is our portfolio? 100,000. So this is going to be a very tiny position. This might be the first one out. So we'll go open up our calculator. We have $100,000 times Kelly price, Max Kelly of 3. So times 0.0373. So we're gonna buy $3,730 worth, and we're paying 1132, and that equals 33 shares. So we're buying 33 shares, and we are buying it on today's date. So let's add that to the portfolio, and just like that, we have some exposure to Alibaba. We have our first position in the Augury public portfolio. We need some cheaper stocks. That's what we need. We need to get some special situations, some cheaper stocks in this thing. But you can see here, we are locked in basically. This should update pretty quickly. And just like that, we have 3% exposure, and we have 96.3% cash. So we have a lot of work to do. We need to go find some more stocks, everybody. So drop in undervalued tickers, and we will go through them. I will see you guys in the next one. Peace.